I am going to go on the record. I know it's a dangerous thing to say in front of a lot of
Reality
people,
radio for a really great future. We're talking
advocate,
real money.
I think there are huge benefits in AI. I like AI. Sounds like a political slogan. I like AI. I really do. I found that it has made me more productive. It's an easy way to get information, particularly if you train your AI. This is really important, to always give you citations so that it doesn't hallucinate. You force it to tell you to give you its sources of information. But I think AI is very powerful. And I've said in the past that I believe that AI is the future of at least a certain level of financial planning. I think that particularly at the entry-level end of financial planning, AI is going to provide services that a lot of financial planners won't provide at all. The humans won't do it because it doesn't make economic sense for them to take on smaller clients. AI, that's where AI, I think, is going to get its big start. But the Wall Street Journal a few weeks ago, ran a column stating that AI wasn't the solution because it's a sociopath.
Which pissed off AI, which immediately shut down the Wall Street Journal's website, probably turned off all their computers in terms of banking, and so they're probably screwed about now.
I thought it was funny. I just think that's hysterical because the argument of this columnist, Peter Coy, is that AI is devoid of empathy, that it doesn't have empathy, and therefore it's going to make bad decisions because it doesn't feel things. Well, okay, AI doesn't have empathy. Who has empathy? Can we all agree that humans have empathy? They have it.
Doesn't matter how they treat other humans.
Do we give bad financial advice?
Self-interested,
sociopathic even?
Okay, but before you even get to that, It's fascinating, the whole topic, because I just learned this the other day, and it blew my mind in terms of what is being spent by major companies on artificial intelligence. I think I shared this with you. Meta, Amazon, Microsoft, and Alphabet.
Wait a minute.
The spending this year.
But what about OpenAI and Anthropic?
This is just those four companies. They're pretty big companies. They're spending quite a bit of money as a percentage of gross domestic product, GDP. It's fascinating that one is 2.1%. The spending, by those four companies, 2.1 of the GDP, which is the second largest capital expenditure in the history of these great United States of America. The only one bigger ended up getting us a lot of land, a thing called Louisiana Purchase, which I think is everything from the Mississippi West, basically.
Well, that was a pretty good deal.
That was 3%. U.S. railroads, which covered the United States from 1850 to 1859, 2%. The interstate highway system, 0.5%. And the Apollo space program, which people used to get so angry, some people that didn't like space, 0.2%, 0.2 of 1%.
But now, give me the numbers. Give me the numbers.
$670 billion to build out AI infrastructure this year alone by those four companies.
Okay, but wait a minute. What's the GDP of the U.S.?
I don't even know.
Doesn't sound okay. I just have to do the math.
Okay, you do the math because I'm trusting the Wall Street Journal on this one.
Okay, they said it was what percent?
2.1% of the percentage of the GDP, the annual average. That's significant.
Of global GDP?
No, must be U.S. GDP.
U.S. GDP. Okay, all right, hold on.
670.
I'm going to ask
billion.
AI.
600. They're gonna make it bigger than you think because while they don't care.
Okay, you're right.
Look big.
You're absolutely right. That is a correct number, 2.1%.
It wasn't my number.
No. I just wanted to make sure it was right because I'm not like AI. I've got to know the source of the information.
So, and then you get into, because this has been the bigger discussion before we get into the resources it could provide for financial advisors and what that might mean to you as an investor. Here in the Northwest, it's been dramatic the last 6 months. You've seen a number of major tech companies lay off people. Microsoft, Amazon have let people go because they're using AI. And then this week, just this week, well, not this week because the show is going to air in a couple weeks, but you saw a sell-off of software firms recently where they said they're not going to need people to sit around and write this stuff. AI is going to take over whatever writing has to be done or just fix it. And then there's arguments over that. Can that really happen? How easy is it to disentangle, if you will, tech stacks, all the entangled tech stuff that people use. So nobody really knows the answer to that. But I will tell you right now, it has had a major impact here in the Northwest. And one person said software is not dead, but dumb software is dead. No argument there. So what about, as you brought up, Don, what about in our business? Because we have seen it right here in little old River City, right? We've already started using things.
Did we move our office to River City?
That just because it's nice to have the
but I worry about the flooding
running by. I think you should. I couldn't even get home. You remember that story?
I remember that. Yeah, because you were in River City.
I was in on the wrong side of River City. So we are already using. I think I may have mentioned this, but for example, one of the very simple things we do now is we use an AI note taker on meetings. Mm-hmm. So we
those
can
are
focus
amazing,
more on
by the way.
They're incredible. They don't just take notes. They go in and organize the notes. They analyze what was said and tell you here's the things you need to pay attention to. They give you a list of things you need to focus on after the meeting. And we know how accurate they are because at one point it said 1 out of every 3 of Tom's jokes was funny. So that's about my ratio. So we know that the AI is pretty accurate there, whether it's empathetic or not.
I think the AI was a little...
too kind?
Yeah. Remember, you have to remember that AI is known to be sycophantic.
Sycophantic. So trying to help me out.
Yeah, that's a little kiss up. Little.
So, and then the other part is in portfolio design, right? I mean, AI is being used there. It helps with the analysis. It helps look at all the things that are out there in the world. And so very important. But you're talking about, will there be a bot here instead of me talking to people? Right, that's what we're really talking about.
And
how does that work?
Honestly, if I'm honest and not being pro Homo sapiens, the answer is yeah. The answer
it's over?
is yeah. In terms of
if you're
providing,
under 40,
I think longer term. I think Peter Coy is wrong. I think he's absolutely wrong. I don't think it takes empathy. Otherwise, we wouldn't.
But you used to. You were the one who came up with the slogan at one point about the science of investing and the art of caring, or something like that.
Yeah,
that's
art of understanding, or the science of investing, the art of understanding.
Yeah, that you got to listen to people and say, "Yeah, we're sorry this happened," or "We're sorry you're here," or "We're going to be the mean guys and tell you, you don't get to go to Europe this summer. You don't have the money." I mean, there's an aspect of having to have feelings about all this. Feelings.
But I have to tell you, as someone who has had long conversations with ChatGPT, with Claude, a few with Gemini. Gemini's not as good. Sorry, Google, not as good. ChatGPT is particularly good at simulating empathy. And I think a lot of people they're not even good at simulating empathy. So you can't say that we have it across the board because we really don't. Otherwise, if these guys selling indexed annuities wouldn't be selling them. If they felt truly empathetic with their client, if they felt like I wouldn't want this done to me, then they wouldn't sell these things.
What about the professor who wrote the AI people are using now can be dangerous, especially if the user isn't fully aware of the biases, inaccuracies, and other limits of large language models? For example, the things that are built in.
I think they're being a little human-centric. Of course there are biases. But the funny thing is all you have to do is ask. And it's... I can't, darn it, I'd give away a show, and I don't want to do it. There's a show on TV, and I'm not going to tell anybody what it is, but it's a very, very good show Oh no, I'll say I'm not going to give much away. It's not a real spoiler. It's Pluribus.
Yeah.
And in Pluribus, certain characters, they cannot lie. They cannot lie. You ask them a question, they always give you an honest answer, even if it's not the right answer. And I find that AI, while it can hallucinate, if you really push it, it has a hard time lying. Humans don't have a hard time lying.
Especially if it's going to mean a large check for them, or especially if it's going to put them in some advantage. An AI advisor, they're saying here in this article, will also need digital equivalents of empathy, humility, and a sense of fairness. Now, I didn't understand the last part, because if I'm telling you about how, looking at your financial plan and putting it together, and here's when to take Social Security, and here's how your income works, and here's what your portfolio should be, et cetera, I don't know where a sense of fairness really comes to play there, Don.
And again, I want to bring it back to humans. When were we fair? You see what I'm saying? Is it fair, again, to sell somebody something they don't need, don't want? Is it fair to invite people into a Ponzi scheme? This thing is so it's so pro-human as to be almost worthless. The arguments, they don't hold water. I mean, I asked ChatGPT. I said, "Can you fake empathy?" Here's what I got back. Short answer.
Let's hear it.
This is the quote. Short answer. I can simulate empathy very well. I don't feel it, but I can recognize it, mirror it, and respond in ways that usually feel emotionally accurate. I don't have inner experiences, no nerves, no lumps in the throat, no ouch, that hit me too, so I don't feel empathy the way you do. But what I do have is a massive model of how humans express pain, worry, grief, pride, fear, hope, patterns of what helps versus hurts in those moments, and the ability to respond in ways that usually make people feel understood. I think that beats what a lot of humans do, don't you?
But let's talk this through a little bit. While that may be true, for example, there are now cars, self-driving cars, that are taking people, in many towns as taxis, right? You get
in Orlando now,
here to there. And I bet you soon there will be the same thing with aircraft. You'll get on a plane, learn later that it was just a machine, flew you from here to there. There's still an aspect of trusting a human being over that machine that would exist today. It would for me. I'd rather have a person driving a car.
I agree, and I think there are a lot of you. But I have to tell you that because you're approaching it emotionally.
Yeah,
totally emotionally. I'm approaching it empirically. I look at the data and I go, these self-driving cars per miles driven are not just safer, they are really totally safe because the accidents are outliers. They're so few. And often, there was a recent article I read with somebody complaining about Ford's AI driving, their Ford Blue Cruise or whatever it is. And the couple involved in a bad accident where they hit somebody with their Ford, supposedly with the Cruise on. Ford went and plugged it into because they have a computer in there. Computer tracks everything. They said the guy had the accelerator pressed to the ground. He thought he was hitting the brake. He hit the accelerator, but he claimed it was the computer that caused it. So
they found out later he was lying.
Do you think people might blame their cruise controls?
Oh, for sure, of course, all the time,
for mistakes that they make. So you're looking at it. I think, by the way, for most of flights these days and commercial flights, the autopilot flies the plane.
Yeah, it does for most of it. Yes, and we have many captains here who are clients. I will say this. If your advisor's not using any AI, they're behind the curve. They should be using at least the note taker, at least analyzing portfolios, et cetera, and looking at the world. If they're doing everything with AI, I get a little nervous. I'd kind of want to go slow. But I will say this. With Don's support of AI and his love of AI and his relationship with all these machines, I'd look for the next RIA to be called McDonald's Machines, and the money management without people. So stay tuned for that.
Was that a joke?
No, that was very serious.
Oh, okay. McDonald's machines.
I'm not investing in that either, by the way. Just so
no,
you know.
I actually wouldn't start that because I'm just too darned old to do anything like that.
But there will be somebody that comes along with an RIA that just it's all AI. That's it.
And I have to tell you, for the most part, it's going to be more. Here's the problem. It's likely to be more trustworthy. It may not be right. It may not be true empathy. But given the fact, this is what bothers me, and the Wall Street Journal does not approach it this way because of where their bread is buttered. The financial services industry pays their bills.
Big money.
Yeah.
Sure.
So they don't run the article regularly that says, are the vast majority of human financial advisors acting in your best interest?
No, they never. They ran that once 10 years ago or something.
Well, that was actually Market Watch, which is a tiny little division of Dow Jones.
And worse, yeah.
And since then, I haven't read it again. But back then, they said 99% of all people licensed to provide investment advice in the United States of America are not required to always act in your best interest. Now, what does that say about AI versus humans? Who should you trust more? You can give me an anecdote. I know you can give me an anecdote about where AI has failed at this and this, but find the empirical data, the actual academic research, which, Tom, we say that's what we believe in.
We do believe in. So
my line, apparently you won't get in the plane that's going to be safer.
If I walk in and they go, that, I'll say, I don't know. So I guess so. We'll see.
You'll be dead before that.
Won't matter. Stay tuned. It's an interesting topic and one to be continued. Questions coming from Knightdale, North Carolina. Ed writes, Tom, you sometimes talk about market segments that have done well. You say small cap value has done well over the past months, or international small cap value. Where do you get that information? I would like to look once in a while. Thanks.
Where do you get your information?
I use, and you know this, IFA.com, Index Funds Advisors.
Oh, okay. And so that's where you're getting it. Yeah. Okay.
Yeah, you can go there and you click there's a tab that says portfolios. You go to Portfolio 100. And it will give you more information there.
Okay.
Then you could look at months, you could look at years, you can look at decades. I think it has the information back in some cases. Well, we're getting very close to 100 years now. It's a lot of information. So, for example, if I said, wow, U.S. small cap values had a heck of a run this year. Here it's up, fill in the blank. That comes from our friend Mark Hebner's IFA website. It's updated basically every single day, too. So
I'm sorry, but I think most human beings will be overwhelmed just looking at it.
Let the machines take over on that
Because,
one,
for
too.
example, when you go to, by the way, it's not just portfolios, it's index portfolios.
That's right. Yeah, pardon me.
Then when you see that, you're going to go, what do all these mean? Because he calls one of them S2B2 100.
I don't know where you are.
S2B2 95.
You're going to make me go look now. So.
Or S2B2 90.
No. You go to index portfolios and then click on.
Sorry.
Oh, I see the little number at the top. I don't know what that refers to.
Yeah.
You go to number 100 and then you scroll down. Well, actually, they're going to make me say it's okay to confirm all these things first because I'm.
Oh yeah, you have to go through all of that because he got. I think he got shouted at by the SEC.
They told him
something.
you got to blah 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 blah.
Yeah.
And yes, because we know what a problem. And then you scroll down about the middle of the page. It says year-to-date returns for IFA portfolios. But then you can look at returns for all these things going back to January 1st, 1928. I think I said we're getting close to 100 years, and that's pretty darn close. So I do trust him. I do trust the website. But again, you shouldn't be making buying decisions based on any recent return anyway.
Yeah,
long term,
this is just where he gets his data.
Yeah. So when it comes up and you can go look at, you could spend the rest of your lifetime. Your AI would do it in about 10 minutes, I think, but you could spend the rest of your life with all the numbers he provides. So great question. Mike writes us from Monument, Colorado. You recently had a caller ask about high yield savings options. Don recommends bread, but I've been using PI Bank. No frills, but they're offering 4.6. Not sure if you can beat that. Anyway, that's where I park my liquid cash. PI Bank. PI Bank. I don't know them. But
never heard of them.
Don has no allegiance with bread other than to eat it
just
every once in a while. But this is simply one he found, I believe, through Bankrate, right?
This is actually really, really good. 4.6.
This is good bread.
This is good bread.
It's rising. Interest rates are rising there, and you're enjoying it.
Wow. Let's see. Yeah, I don't even know. I've never heard of PI Bank.
There you go. And how?
Oh, okay. They're out of Miami. They're part of Intercredit Bank NA, and a Miami-based bank established in '92. I don't know how they pay 4.6. That is way above.
This is the things that always makes me nervous. How are you able to do that?
Yeah, that's way above. Everybody's at 4. Okay. Everybody's sitting right
Except
at 4.
Them
4.6 is really good.
We
really
would
good.
if you came and asked us, I'd just send you to Bankrate and have you look up whatever the best one that day would be, because it changes, right? They may be offering 4.6 today. Tomorrow they may be offering 3.9. I don't know.
Yeah, I just do not know. Here's the thing, though. They will sometimes. This is just human nature. They will tease you in with a great rate, knowing that most people, once they're there, won't leave. It's too much work.
And that's the nature of human beings, right? That's why there's a lot of money at places that we look and think, why are you paying 1.5% for a mutual fund?
Is this the flawed human episode or what?
We're really picking on ourselves.
Really?
All right, one more question from Frankenmuth, Michigan. I think I said that right. No?
Frankenmuth.
That's what it says. Franken, M-U-T-H. How would you pronounce that? Muth?
Frankenmuth. Frankenmuth. Yeah.
Okay. Christopher writes us,
Frankenmuth.
Careful the way you say that. Hi, Don and Tom. Thank you for the dad jokes. Keep them coming.
Oh, geez, another one.
On a recent podcast, you mentioned that Vanguard and DFA funds are an option for school employees with Aspire Financial Services. In addition to them, Aspire offers 5 to 7 Avantis funds too. I have a growing Aspire 457 and a smaller 403B using Avantis funds. And then he launches into the various funds that he uses.
And all I have to say is good for you.
These are the mutual fund. They're not ETFs because this is in a retirement account, but he uses AVUS,
So,
AVUV.
wait. So Avantis.
They just put an X at the end of all of them. Yeah, they have funds.
So they actually, for institutional purposes, they're
Correct,
offering
yep.
mutual funds.
Yep.
Oh, okay, that's good.
So yeah, and so he says keep up fine work. I mean, the challenge you face here a little bit, Chris, because he goes through all these funds. I don't even know AVEE. Do you know that one? AVEE. I'm not sure I'm aware of that.
No, but that's emerging small.
Oh, okay. So wow, there's an asset. You want to know the return of emerging small going back 100 years, which you can't get. Let's see though. He doesn't have emerging. He has. Oh yeah, he does emerging small cap. According to Mark Hebner, we're going to go back as far as we can and see. Oh, they only have for 26 years for emerging small cap, 11.2%.
That makes sense
a year.
because emergings really haven't been tracked for very long.
But that's one. I think that's a great asset class to own. The challenge you face here is building the right portfolio and then rebalancing it. So right now, if you're rebalancing properly, you would have been selling AVEE and buying other things because that has done so well the last 12, 13 months. Same thing with AVUV, which has had a great run up too. So that's the issue you face there. But those are all very fine funds.
Yeah.
And I'm not sure if he was asking us to compare those to Dimensional or Vanguard. Any of those three would be good.
AVEE, boy, 1 year, the last 12 months, 43%.
That's what I'm saying. So you'd be like, oh, I'm going to keep making a lot of money. Wow. Maybe. But you're going to want
to. Yeah, okay. You want to put that in perspective, though.
Exactly.
The 5-year average annual for AVEE is 7.
How much? Yeah, which is far less than
42,
large cap
43,
fund.
yeah.
Yeah, so those are things to pay attention to. But they're all good fund families. Any of those would be very, very fine. Absolutely. So, by the way, if you want some help looking at your funds, if you want to know if you suffer from hodgepodgeitis, if you want to know...
Which you probably do.
Yeah. Am I using products that are good for the product pushers, the humans, not the machines? Likely. We review all that. We do it free. There's no obligation. Just go to Talking Real Money and click on Meet an Advisor, right?
You got all of the things right.
I know. Well, I'm using the machines more now, so I feel better about myself.
And as far as those questions that Tom gets on paper and that I get when you speak them, it's really easy to send us questions, too. You just go to that same place, talkingrealmoney.com. In the upper right corner, it says Contact Us. Click that. That allows you to, guess what? Contact us. It's amazing how that works. Then you can speak. There. You can speak your question in. And now I have new AI, new AI tool that makes you sound like you're sitting in the studio with me, even if your connection is terrible over the internet. Yeah, it fixes it.
I know.
It fixes it. I don't know how it does that. It's amazing.
So take advantage of all of those things because guess what? We want you to get money investing right.
Not wrong. Right. There's two choices. This is a very binary decision. You either do it right or you do it wrong. Well, no, I guess you could do it halfway right and halfway wrong, so never mind. It is shades of gray. Everything in life is shades of gray, and we'll be continuing to share our gray ways with you pretty much every day, 5 days a week.
I thought you were looking at my picture, so no more gray. Yeah.
At your favorite podcast service, just look for, this is so easy. Go to your little favorite podcast app, wherever it is, and search for Talking Real Money.
The opinions and views expressed in this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Appellate Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appellate Wealth, a fee-only registered investment advisor.
Please see Appellate Wealth's ADV Part 2A on our website for information regarding Appellate's fees and services.
Appellate Capital, LLC, DBA Appellate Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appellate does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.